Hi, everyone. This is Jason Barrack of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today we have a returning guest. It's Bitcoin entrepreneur and proprietor of Run to Gold and How to Vanish, Trace Meyer. We've had him on a couple times to speak about Bitcoin. If you remember, 2 years ago, we had him on to speak about Bitcoin when it was around $1. And then we also had him on back in August with a Bitcoin roundtable with Jeff Berwick and Gabe Sukanik. And, a lot of things have just happened in the Bitcoin market, Trace. It's just remarkable. I don't think I've ever seen this type of tailwinds in a market just conflude all at once with the Baidu news and then all these other things that are going on.
Oh, I completely agree. We are seeing perhaps, as I mentioned on a Fox Business interview, this is perhaps the greatest bull market ever.
That is unbelievable. And, this is a groundbreaking, innovative technology. Even 5 or 6 years ago, there are obviously other attempts at Bitcoin before this, but I think they improved upon the other stuff, the other virtual currencies, because, you had Liberty Reserve and eGold and things like this, and it wasn't decentralized or there were other issues that weren't solved, and Bitcoin has improved on them. And, this is going to cut transaction costs. You mentioned that in our Bitcoin roundtable. You just see how much cheaper you can send money back and forth. It's a lot more efficient. It's going to work in developing countries, like you said, right? Because then they're not going to get destroyed on fees for Western Union or MoneyGram or stuff like that.
Oh, yeah, I completely agree. The IMF did a study. Average cost of a remittance to Africa is 8.16%. With Bitcoin, you can do it for a fraction of that. And one of the interesting things that we're seeing with Bitcoin, though, is that the amount that people are actually spending on transaction fees to use the system, even though those fees are completely immaterial, we're talking it's like 7 cents per transaction to get like really high priority processing. People are spending about $40,000 a day U.S. network-wide on these transaction fees, whereas in April of 2013 they were only spending $2,000 to $3,000 a day. So we're seeing a rapid uptake in this new technology. I would like to call it, hyper-monetization as opposed to something like hyperinflation.
And that's a 20-fold move then if you're just looking at the amount of transaction costs then in the network effect and how many people are adopting Bitcoin then, right?
Yeah, and that would be speaking to, when we look at the price function, you've got supply, which is fixed and known to all market participants. Then you've got transactional demand, and you've got speculative demand. And transactional demand is actually extremely inelastic. Whether Bitcoin's $1 or whether it's $10,000 a coin, that doesn't matter when you're actually using it to transfer value across distance. And so then that just leaves speculative demand to figure out your price component. And so it is interesting that, the amount people are paying relative to the U.S. dollar in transaction fees is up 20-fold from April, but the price is only up maybe 10-fold or so. And so, or 5-fold in some cases, depending how you want to measure it. And so it appears that although Bitcoin's at this all-time high, it's actually cheaper on a fundamental basis based on that fundamental transactional demand than it was even like back in April or at a lot of other times in its history. So that's very exciting and very bullish. I think a lot of people have a very difficult time trying to come up with a model or trying to come up with a way to value Bitcoin. Most people can't even value gold in the traditional finance space, and so they're just really grappling trying to figure out how to value Bitcoin. But those of us that understand it a little bit more and been around it for a while, we're able to kind of get a little bit more of a grapple on it.
It seems to me then that one of the basic ways you would value Bitcoin is the growth then in how many people are using it, right? Would that be an accurate statement, or is not the way that you're valuing it?
Well, that's definitely one factor that I'm using in this particular, making this particular case is, I'm looking at the amount of money that people are actually spending to send transactions back and forth. And if you do take like the R-squared correlation coefficient between that and the market cap, they're very closely related. So I think it's a decent model if you want to use something very basic.
Well, what I don't know what your opinion of this is, but when there's trend trading hedge fund managers, that are worth billions of dollars, and there's a lot of these guys now, and then they're putting their own capital into it, and these guys don't care about the fundamentals of a market. They only care about what the chart looks like and the price action, and then they're writing in their newsletter that they think their clients should all go out and buy Bitcoin because, it's a slam dunk that it's going to go higher. That's what worries me in terms of a bubble effect. Now, I don't know like what price Bitcoin could go to. I mean, I think you've laid out a good case. Before we start recording, you said that there's a good case to be made that Bitcoin would be fairly valued even at $2.8 million, I think, right, per Bitcoin, because that's 1% of total.
Well, not necessarily fairly valued up there, but you're talking about these hedge fund guys, but there is one thing that they get, and they get it pretty good, and that's like an offshore bank account where their assets can't be seized. And Bitcoin, one of its fundamental value propositions, you can't seize it. It's better than your Swiss bank account or your Singaporean bank account. And so, last month I was talking with a senior vice president of wealth management at Goldman Sachs. Works with a lot of high net worth individuals, hedge funds, etc. And we were, after the dinner with 25 other finance people, I was talking with him one-on-one about this, and I kind of laid out the case. I was like, look, Bitcoin's a very asymmetric trade, and it, just 1% of someone's net worth in Bitcoin would hedge them against all the wealth destruction that could happen in the sovereign debt markets, the bond markets, the equity markets, etc. And if you move just 1% of the cash balances from offshore tax haven bank accounts, which currently hold estimated $30 trillion of value, you move just 1% of that into Bitcoin, you're looking at $2.8 million per Bitcoin. And so, when we're looking at a $700 price right now and a $7 billion, $8 billion market cap, I mean, Tesla has a $20 billion market cap, and it lost $1 billion last year, and it makes cars, versus something that you can't seize. An offshore bank account you literally can't seize that's equity-based, that's not going to go poof like Cyprus. No counterparty risk. There's a strong fundamental value proposition for these hedge fund people to own it, and it acts as a totally unique asset class on their balance sheet. So, not only are they these momentum traders that are chasing the charts, but they also have a key personal need for an asset that has characteristics that Bitcoin has.
Yes, and Bitcoin, in my opinion, Trace, I don't know about you, but I think it's doing what I expected gold and silver to do. And I've just been following the sentiment levels of the gold and silver community, many longtime gold and silver bulls, and a lot of them are starting to give up and dump gold and silver now, unfortunately, at the bottom, I think, or towards the bottom, and they're starting to go into Bitcoin and chase it higher. Is that what you're seeing too?
Yeah, there's some of that. I mean, I run runtogold.com. Obviously, I like gold and silver too. But I've had a lot of in-depth discussions with like everybody across the spectrum, whether it's Kerry Lutz or Jeff Berwick or Lou Rockwell or James Turk or Eric Sprott or John Embry, etc. I've talked with all of them about Bitcoin, and I think what it comes down to is this. Like, gold isn't necessarily a solution to the current mess. It's a protective defensive measure to help, store and protect your wealth, but it doesn't actually solve the market need of transferring value, of allowing commerce to continue to happen. And Bitcoin actually is a solution. Like, it's better than credit cards for money over the internet. Like, it really is a solution, and the market has this way of rewarding the solutions. And those people that have a real deep understanding of monetary science and monetary theory, well, they got Bitcoin a lot sooner. And I trained a lot of them. And then there were other people who were just a lot more stubborn about it, like Chris Duane or James Turk, and they didn't get it. And the great thing about the market is that the market rewards people financially if they make the correct decision, and it punishes people financially if they make the incorrect decision. And so, if we take Chris Dewayne, for example, when we were debating about this, we had a debate, and it took 5 Bitcoins to buy an ounce of silver. And now it costs, like 36 ounces of silver to buy a Bitcoin? And so, I mean, anybody who's like followed his advice has just had their balance sheet completely decimated compared to people who would have taken the other side of the argument, like me, and bought some Bitcoin, or straddled the position, maybe have liquidated out, maybe 5 to 10% of their gold and silver part and moved it into Bitcoin. But yeah, I mean, I think it's a prime example of you have to have a really good understanding of monetary science theory. You have to have a high IQ just to be able to grok the math, because Bitcoin is like very complicated math. And if you're going to try and move $1 million into it, you want to know what you're buying, right? You have to understand computer science, cryptography, and that's computer science both on a software side and on a hardware side, because you want to know how these application-specific integrated circuits and mining and like how all of this works before you're going to start committing big amounts of capital into it. Or at least, back when we were first talking about it, when it was $1, and gold was like $1,500 back then, and now gold's $1,200 and Bitcoin's $725. So if you were going to move, say, $1 million out of your gold position into a Bitcoin position, you had to really understand a lot of different branches of knowledge and have a tremendous amount of foresight in order to make that decision. But if you did make that decision, the market has just rewarded you huge. Like absolutely huge. To give you an example, I did an interview earlier today, and I used one of my friends that, as an example. We had breakfast back in 2011, and it was 2 people who run a hedge fund. One had a Harvard MBA, runs a hedge fund. The other has a PhD from Columbia in finance, used to work for Arthur Burns. And I actually gave them the opportunity to buy $25,000 worth of Bitcoin, which was extremely difficult to source at the time. But I was, I had connections because I'd been in the industry for a while, et cetera. And both of them kind of patted me on the head. They're like, "Oh, that's neat," and kind of sent me on my way. Well, a couple months ago, I was back in New York, and I went and met with one of them, and I reminded him that $25,000, those Bitcoins he could have bought, they would have been $100 million now. And today they would be $350 million. Not that you could actually liquidate out that much cash, because I don't think we have enough on the buy side books right now to liquidate out like a $350 million position. But like but I bet you could get $100 million out of it, easy. And so, this just highlights the fact that there are a lot of really smart people out there, whether it's like Ray Dalio at Bridgewater, for example. He's basically just said, I just don't really understand Bitcoin, but it's going to be big. And the guy from Fortress, and like at the end of the day, I kind of see it kind of like Ender's Game. What's happened is, with the computer code and the censorship resistant nature of the network, what we've done, what the math guys have done and the computer guys who've like built Bitcoin, what we've done is we've changed the gravity constant. And so now the whole financial universe is operating under a different set of like gravitational rules. And a lot of people are beginning to grapple with like trying to make sense, because stuff's not acting like it used to act. But they don't really know why. And the reasons, in my opinion, because we've changed the gravitational constant, which gets back to the return on economics. Well, the economical return on violence. That's the constant that we've changed, that goes down to the gravitational pull that everything kind of operates in. And it's very exciting, because we're going to see society completely rebuild and reorganize itself based around this new gravity constant.
Now, One of the things about Wall Street is Wall Street's not really very innovative in a lot of aspects, and they tend to, follow afterwards. They tend to not be willing to take those risks like you did as a entrepreneur. That's just amazing. And when you present it to me at a dollar, I wish I would have put even $1,000 into it as a hedge to my gold or silver
Yeah,
position. But hindsight's always 20/20.
because it'd be $1 million now, literally.
Yep, and I could have funded all my other ventures that I want to do. But anyways, though, I'm sure there will be other opportunities for similar things because my contacts list, including you and others, that you guys will tell me about. But let's talk about the Baidu news because I think that's what Bitcoin was kind of stuck in a trading range for a while. It hit $250, I think, about 7-8 months ago, right? And then it was just consolidating around 100 for months, right? It was just going in a channel, and the Baidu news is what broke it out again.
Yeah, the Baidu news, and I really think that these Senate hearings that we had a couple days ago are kind of a reaction to this. Like China with this Baidu news is basically said, given the green light to Bitcoin. And I think this very well, historians might look back on this and be like, this was a Suez Canal type of moment where the power shifted from the west to the east. Because, in the Senate hearings, you had Senator Warner, and he was like, Bitcoin could be huge. It has huge implications with, fiat currencies and central banks, etc. And then they were asking questions to Tony Gillespie, who's CEO of BitPay. And I'm a seed round investor in BitPay, by the way. So if any merchants want to accept Bitcoin, I highly recommend them. But even though I'm a little biased, right? But Tony, he answered his question. He was like, because they were talking about the Bitcoin industry and all this stuff. And Tony was like, well, it really comes down to the exchanges because that's where the liquidity is. And the three largest exchanges in terms of volume are in China. The next one's in Tokyo. You got the other two in Europe, and you've got one in Moscow. And then he made this statement. He said, the U.S. is not a player in Bitcoin. Imagine if the U.S. were not a player in the Internet. Imagine if they had chilled through the regulation and legislation the development of companies like Yahoo and eBay and Amazon and Facebook.
We'd be like Italy. We'd be like Italy, where you can't even put up a website, I think, in Italy without government approval and bribing 4 or 5 different bureaucrats for big money.
Yeah, and at least Italy is a little bit better than North Korea, right? But at the end of the day, that's what I think the Senate is starting to understand is that the legislative and regulatory environment in the U.S. has stifled monetary innovation. And as a result, it's fled to the Far East and to China, and that is beginning to pose a geostrategic and a geopolitical threat. And so they're basically saying, look, banks, here are the rules, here are the regulations. I mean, we had Department of Justice saying it's completely legal to use Bitcoin. So now the hedge funds can buy it and sit on it and know that, it's fine. They said we've got a regulatory framework that we can apply, and so the financial institutions can work with Bitcoin entrepreneurs to cultivate the industry here. Because I think the Senate and just the players in general here are beginning to realize the value isn't necessarily being created by Wall Street or by DC. That's the paper belt. It's being created by Silicon Valley and by the disruptors and by the innovators, by the people who create the solutions. And if we're going to drive those people out of the U.S. and into the arms of geopolitical competitors like China, that poses risks to national security, to our intelligence agencies and services and stuff like that, etc. And so, those were a lot of the themes that came out of those Senate hearings. And so I thought the Senate hearings were actually very, very encouraging towards developing a Bitcoin industry here. Otherwise, we just, get left in the 1950s like North Korea or Italy.
Now, in terms of the Senate hearings also, one thing that has me worried is the tax consequences of Bitcoin. And we don't get a lot of answers on this because I'm not sure the IRS has even set out proper guidelines for Bitcoin. So can you talk about the tax consequences for Bitcoin? Let's talk a hypothetical since, you're a lawyer and I did 1 semester of law school. Hypothetical, I bought I was at.
let's start with the general rule first before we do a hypothetical, so then we can apply it, right?
Okay.
So the official general rule is that there is no rule specifically for Bitcoin right now. Bill Rounds, who writes How to Vanish with me, we co-authored a guide called A Lawyer's Take on Bitcoin and Taxes. And it's like 30 pages. We have 60 legal citations to all the relevant federal code. And so anybody who wants to make a good faith effort at complying with tax law, and personally that's what I do because I don't want to look over my shoulder. I don't want to have any problems in that area, even though I don't necessarily like what they spend my tax money on. But, if you want to be compliant, then that guide helps people do it. And we have different approaches that one could reasonably take, like a barter approach or a foreign currency approach or a capital gains approach, etc., for income. And then, applying different rules like long-term or short-term capital gains. And then, if you're a miner, for example, or something else, you actually have deductions that you could take. You could take deductions on the computer hardware. Let's say that you had Bitcoins in a wallet that got with a service provider that got hacked. You could take a casualty deduction for that loss. You could take deductions on electricity, or if there's storage fees that you're paying, etc., or the brokerage fee to actually buy them. So, you've got incomes, deductions, and there are reasonable ways that we can fit that into the current tax code and, at least not be engaged in, blatant tax evasion. I think that, there are reasonable approaches we can take. And then, the IRS, from what I understand from the Senate hearings, the IRS is going to be coming up with some guidance. And so that way, you don't necessarily have to go get a private letter ruling or something for your own individual case. So now that we've got the rules in place, let's move on to a hypothetical.
Yeah, so the hypothetical then is that I bought $10,000 worth of Bitcoin around $10, and I'm sitting on over $500,000 worth of gains, and I want to start selling some of my Bitcoins to go buy a business or go buy gold and silver or go buy some real estate or dividend stocks or, just diversify it because too much of my net worth now is in Bitcoin. And what's going to stop the government then from potentially, putting a windfall profits tax on if I don't sell if I just hold my Bitcoin? What's going to stop the government from putting, 40, 50, 60% windfall profits tax on, or taxing it as a collectible like they do with gold and silver then, where, it gets taxed as ordinary income, and the higher the paper price goes for gold and silver, the, moves you into a larger, higher income bracket and takes more of your gains.
Yeah, like windfall taxes or things like that, that's very speculative. And if they were to implement stuff like that, then it would have even more of a chilling effect on using Bitcoin legitimately, which would stifle innovation of the industry, which I think would be counter to the public policy goals, at least as the Senate seemed to come out with in favor. So, I think that would be speculative and most likely would conflict with public policy goals that they have. But let's just take, buying $10,000 worth of Bitcoins at $10 a coin, so you got 1,000 coins with a $10 basis. They're currently worth about $720 a coin, so that's $720,000 of unrealized capital gains. So if you sold, say, $20,000 worth of Bitcoin, you would, that would be, you would take a recognition, and you sold them for dollars, so you'd have $720 minus $10 would be $710 of capital gain per Bitcoin that you sold, and you would have sold some fractions of it. And so that's how you would calculate a capital gains on it. And then you would pay the appropriate rate, whether it's a long-term or a short-term capital gain, depending on how long you held it. And then you could take the remaining amount that you had, probably around like $15,000 or so, depending on your bracket, and that's what you could then, that would be after-tax money that you could go and invest in real estate or gold or silver or whatever. If you were to take and instead of selling for U.S. dollars, instead sell for, trade it for gold or silver or something, you'd most likely take the fair market value of the Bitcoins at the time of the transaction, the fair market value of the gold, and that would be how you'd calculate the gain amount. So the $720 figure from the previous example, that's how you'd calculate that. You'd still subtract the $10 basis that you had, and then the difference is going to be that gain that you'd be reporting as income, and then paying the appropriate tax on it with U.S. dollars. You don't want to pay it with American silver eagles, which are legal tender, by the way, at $1 per 1 ounce of silver.
Yeah, and because the eagles are not going to be counted then as their market value then, right?
Yeah, I mean, if we really want to get into like a speculative, crazy law school type law review article, you know, what happens if you buy Bitcoins with like a $50 1 ounce gold coin that's an American Eagle, right? Because it's $50 U.S. legal tender under federal code, and then your Bitcoins go up in value, and then you trade the Bitcoins that you'd gotten for like 500 1 ounce silver American Eagles, which are $1 U.S. legal tender under federal code. You know, you still, like, your basis is $50 and your recognition is going to be maybe $500, right? But
try to cheat the government.
No, you're not cheating the government, because like what the point I'm getting at is under federal code, under 31 U.S.C. 5101 through 5118, it's unintelligible at defining what a dollar is. And we're using dollars to define what our as our numeraire to figure out our tax liability. For example, $50, which is 1 ounce gold coin, is equal to 50 1 ounce silver coins, which are $1 a piece. So you've got $50 equals $50, but 1 ounce of gold does not equal 50 ounces of silver, even though that's what the federal code says. Like, chemical law doesn't say that, right? Because like silver and gold are different elements. But then you've got like pennies and nickels and all of this stuff that make up different combinations that make up dollars. And then you've got Federal Reserve notes that make up dollars. And so, I mean, there was a big tax case called the Kayer case. It was like a $100 million tax fraud case about this issue, because the real estate contractor was paying employees with gold and silver coins that were legal tender of certain amounts, these American Gold Eagle coins. So, I mean, that's another problem. We've got unintelligible federal code when it comes to answering the issue of what is a dollar. Like, we don't have a definition. And that's problematic.
It's not just that, Trace. I mean, almost all the rules and regulations are archaic in the U.S. government. You have stuff. You have water laws in place that, now in many states and municipalities, and this was based, when the U.S. population, people were still moving from one area of the country, like to Oklahoma, and the land grab and stuff like that. There was hardly any people. Where the more water you used and consumed, the less you get charged. So those are not going to work now. There's obviously way more people, and it costs a lot more to pump out the water and stuff like that. The government laws are always slow adopting to how markets are changing.
Right, and maybe that's where the U.S. gets left behind when you have something like China, where they're able to, or Singapore, where they're able to really bring to bear the law and the economy in a more efficient way. Like Singapore, for example, they wanted to bring the gold industry back to Singapore. And so they got rid of the capital gains on gold, and now they're one of the major gold trading hubs. And then they're like, you know what, we need a refinery. And they went from deciding they wanted a refinery to having an LBMA refinery pumping out LBMA gold bars within 8 months. Breaking ground, building the refinery, putting it all in there.
That's awesome.
I mean, how long would it take to get through all the EPA red tape in California to build a gold refinery, right?
7 years, 10 years?
If you ever get it done. I mean, when was the last time an oil refinery was built in the States? It's been like 30 years. So,
a brand new one. Yeah, it was the 70s. But yeah, even the additions, the upgrades on current refineries, like those things still cost billions of dollars extra in environmental impact studies and permitting and all those.
Yeah, and so it's just an example of where the U.S. is really strangling their own economic productivity by having a state. by having a government in general. But, that is what it is. And if you're in the U.S. and you want to deal in this marketplace, then you put up with that. But, the general trend of the U.S. seems to be very similar to the general trend of Argentina. And Bitcoin is great in the sense that you don't have to trust or bet on these politicians and their currency anymore. And so you can exit. There was a great talk by one of the VCs about Silicon Valley, the ultimate exit, and he's talking about voice versus exit and how this paper belt of Wall Street and D.C. is just strangling the economy in the U.S. And I think that these Senate hearings about Bitcoin, recognize that, and they basically they're aligning themselves with the VCs and not necessarily with Wall Street, because that's really what I see this Bitcoin fight shaping up to be. It's going to be the old money interests of the current status quo with central banks and fiat currencies versus the innovators and the disruptors of Silicon Valley and all that kind of embodies with internet technology. And so these two giant titans are just getting ready to clash, and it's going to be fun.
Well, that's good, Trace, because I'm really fed up with the status quo. It doesn't really benefit people like me, the younger people in our generation who are just trying to, get out of college or graduate school or law school and trying to, get a good life for themselves. It's just all the deck is essentially stacked in a lot of cases because of the debt load and how much it costs just to have a normal standard of living. The system has basically been designed, to funnel all the wealth to the top. The QE programs have just made the rich richer. They've given, DC unlimited money to borrow and Wall Street free money to speculate with.
Yeah, and it's not just the U.S. that has this demographic war going on. Italy, Europe in general. If you look at pension type plans and Social Security type plans, the more entrenched those are, the lower the birth rates. And the reason you'd have a low birth rate is because you vote no confidence in the future, so you don't even want to have children, right?
Yeah, exactly.
And
yes.
So that's very much a problem. And so, but with Bitcoin, you do have these younger generation coming up and millennials, et cetera. And, millennials, they don't really care about the housing market because they're just renting. They don't really care about, the businesses or the stock markets because they don't have a bunch of money in retirement plans. And they don't care about the municipalities or the bond markets because they don't own a lot of debt. And so when they see something like Bitcoin come along, whether they realize what it's going to do or not, and how disruptive it is, they can look at the current system and they can look at Bitcoin, and if it's if you bet on Bitcoin, in effect you're betting on the destruction of a lot of the legacy institutions out there. Well, they don't have a retirement account that they have to worry about. So they can buy Bitcoin, and if that means that it burns everything else to the ground in a form of creative destruction, then so be it. They don't care. They don't have $300,000 of Stockton's municipal debt in their portfolio that they're leeching off of for their retirement. Just burn all this debt to the ground. Burn all of this legacy institution. They're not the ones having to worry about their pension from IBM or whatever. Just burn it. Burn it to the ground and let's start anew. And so, I think Bitcoin in a way is this Jubilee type instrument because it's equity based like gold, and so you can sit in Bitcoin and you can let everything else burn, and it's really no problem for you financially.
And that's a great point, Trace. And I'm all about competing currencies. So if Bitcoin is going to do well, gold, excuse me, gold and silver eventually start doing well again. All of them can do well. I think there's plenty of room in the market for all three of them to do well. Especially because when the alternatives are these unlimited digital keyboard entry, dollar, yen, euro, pound garbage. So, I just think it's great, and hopefully Bitcoin they will not figure out a way to kill it, and we'll have that competing currency, the free market. We're all about free market forces here. And, let's summarize then some of the future growth prospects of Bitcoin. So you expect then more adoption then, especially in the developing world, or where do you see Bitcoin's future growth prospects in the near term coming from?
Well, to help people get like a comparison of all of this, I've actually made an infographic at run2bitcoin.com, and so it kind of shows how this feedback loop all happens. But as the hash rate goes up, there's more confidence in the network because it's more secure. It brings in more users. More users increases demand, so price goes up.
Positive feedback loop.
It becomes this positive feedback loop. It opens up entrepreneurial opportunities wherever there's governmental regulation. Like Argentina, if you use your credit card outside of Argentina, you have to pay 15% tax in addition to whatever you buy. So if you go up to Miami and buy something, Argentina makes MasterCard put a 15% tax on your credit card bill. Bitcoin helps you get around that. So anytime there's regulation put in place, in a perverse type of way, it's actually good for Bitcoin entrepreneurs because it opens up profit opportunities. And so I think as governments and nation states get more desperate for revenue and get more desperate with things like FACTA and like Argentina, etc., then those are growth opportunities and whatnot. There's a Bitcoin conference going to be happening December 7th and 8th in Buenos Aires. Probably about 500 people are going to be there. I mean, why in the world is Argentina adopting Bitcoin to such a great degree? Because they have such horrible monetary problems already going on over there.
Yeah, for a long time.
Yeah, and so Bitcoin kind of acts as this status quo instrument. And so, if debt standoff between the House, with $17 trillion and raising the debt limit, millennials might just sit back and be like, I hold a lot of Bitcoin. Burn it to the ground. Don't come to any resolution. Don't, default on the debt. That'll actually make my Bitcoins worth more. And so, I think there's just a lot of that opportunity there. And then, of course, mixing it with things like Singapore or Switzerland or Uruguay with bank secrecy and asset protection and stuff like that. I mean, there's a lot of opportunity there. Kenya, 35% of GDP is going through M-Pesa now, and they want to tax M-Pesa. Well, you can see, I got friends that have wallets that operate over a cell phone. You send text messages, and that's how you move Bitcoins around. And it relays transactions to the Bitcoin network. Like, there's no reason that Bitcoin couldn't spread throughout Africa via some type of cell phone or SMS application. And so, what that would do for allowing people to save and accumulate capital in Africa, I mean, you've got all these different countries and unstable Somali shillings or whatever, no way to save safely. Bitcoin can help all of that. Crowd lending and crowdfunding and crowdsourcing. We got Colored Coins Project and the Mastercoin Project. I mean, that's the other thing. People don't realize, like, Mastercoin, it's about three months old now, and it's up 2,000% in terms of Bitcoin, and it's up 70,000% in terms of U.S. dollars if you had bought Mastercoins. I mean, people don't even, they're Mastercoin, what in the world is that thing? But, like, Bitcoin will allow us to abstract on top of the blockchain and act like a title registry or a property registry, and we can put stocks and bonds and basically everything that Wall Street does, we can build it into or on top of Bitcoin and this stable, equity-based, no counterparty risk unit. And that has huge implications for everything, with this triple entry bookkeeping ledger that we have for capital formation, accumulation, governance, etc. So, I mean, I just see applications all across the economy, and it's going to be the innovators and the disruptors, basically Silicon Valley coming in and creatively destroying the paper belt, coming in and creatively destroying Wall Street and D.C., because we can build in escrow and automated arbitration services. We can have the application and remedy of law done with software code instead of with legal process. I mean, it's really fascinating, everything we're going to be able to build with this.
And I think that's great. And, you've just given our listeners tons and tons of examples of all the positive tailwinds, all the great news story. The Baidu story is just absolutely huge that China is accepting, China's largest website is now accepting these as payments. And I think this is building a very strong case for why Bitcoin is going to go a lot higher, but we just don't know what the government reaction is going to be to any of this stuff. But I think you mentioned this earlier, it's going to be very tough for the governments to enforce the laws for any of these crazy punitive taxes that they could put in place.
Yeah, and in a lot of ways, we have this mascot for Bitcoin. It's the honey badger. And it's because the honey badger doesn't care. Honey badger doesn't give a crap. It just takes what it wants. So, when we have this censorship-resistant type technology, regulation, taxation alone becomes much more consensual. It becomes much more, you have to get the consent of the governed in order to actually have the regulations be applicable to them. Otherwise, they don't care. They just don't care. Burn it to the ground. And so it is just actually a lot of fun. It must drive them crazy, all these OCD control freaks in the paper belt.
Yeah, I'm sure it does. Or maybe, Trace, they're secretly, they want to protect the system. These guys are hypocrites because they routinely, especially the Congress people, they routinely trade on inside information. They think they're above the law. They don't, they sit on these subcommittees and they get the inside information and they trade on it all the time, make millions of dollars. They get the IPOs from Wall Street as bribes and corporations as bribes. So these people think they're above the law. It would not surprise me if secretly a lot of people on Congress and D.C. were, speaking out against Bitcoin and then buying it anyway.
Yeah, or maybe they've established their Bitcoin positions, and so now they're, both in the Chinese Parliament and the U.S. Senate, but, both of them, Chinese Congress, they probably established their Bitcoin positions, and now they're going to work to kind of legitimize it. And that way it'll make their Bitcoins worth more. I mean, Bitcoin is just so corrosive in every aspect of the current status quo because it just it just really harnesses the human action element in a very positive way to protect itself and to cause itself to grow.
Well, Trace, I want to wrap up the interview here, so I just want to thank you very much for your time and for coming on and commenting and updating our listeners on the Bitcoin market. Can you please tell our listeners more about some of your Bitcoin ventures and some of your other websites where they can get some of those Bitcoin reports?
Yeah, so there's the freebitcoinguide.com, and that'll help people kind of get into Bitcoin, see different service providers, etc. I'm a seed round investor in BitPay, which is the largest merchant processor. About 3 months after I invested, Peter Thiel invested $2 million at a 432% higher valuation than I did. So that's kind of fun.
Nice.
It's kind of fun beating him to the rabbit, right? I've also done a seed round investment for the Armory Bitcoin wallet, so bitcoinarmory.com. It's a free open source wallet. It can help people secure their Bitcoins to the highest, absolute highest, most secure way possible. So if you're going to move a significant amount of wealth into Bitcoin, I highly recommend Bitcoin Armory for doing that. I mean, I had a friend that I introduced to Bitcoin, and he put $100 into it, and I helped, we walked down to Wells Fargo to deposit the cash and get the Bitcoins, right? And he got, more comfortable with Bitcoin, put more money into it, had $180,000 in there, and he logged into his online wallet, and it was all gone one day, and he had no idea how that happened. And he told me that he hadn't followed my advice with setting up an Armory wallet in my free Bitcoin guide. And so, I decided, what, we need to have a little bit more serious funding of wallet technology. So that's one of the reasons I funded this development of Armory wallet technology. And, my buddy and his wife, their 180 grand worth of Bitcoins would be over $1 million now. It's very unfortunate. But, you can't just think that you're going to come in to this brand new technology and suddenly be able to, use it very competently. I mean, it's it is a new technology, just like we use SMTP, Simple Mail Transfer Protocol, to send emails. Like, you can't just come in and be an email guru, like, right off the bat. You have to practice and tinker with it, just like HTTP, Hypertext Transfer Protocol, for visiting websites and writing HTML, etc. Like, you have to get in and use money over internet protocol. You have to just get in and tinker with it. And so that's why I wrote the free Bitcoin guide, made these investments so that if you're a merchant, you can accept it with BitPay. If you want to store your Bitcoins, you can use Armory. And then also the run2bitcoin.com. It's got that infographic and like links to 11 articles I've written on the real underpinning intellectual argument about Bitcoin. So anybody, especially gold and silver bugs, I think they'll find some very helpful stuff there, especially advances, in my opinion, whole new advances in the realm of monetary theory and monetary science. So I'm quite proud of myself for that. But anyways, yeah, that's it's a very exciting area, and I hope I've been of help to people who've gotten in here. And I know I've made a lot of people a lot of money because they're always buying me dinner.
Yes. Well, hopefully you'll find some other opportunities besides some early adopter opportunities in addition to, buying Bitcoin. You'll bring them my way again in some other interviews. But although you just said that Bitcoin could be the greatest bull market ever, though, so I think that's the title we're going to go with for this podcast.
Okay. Thanks, Jason.
Well, thank you very much for your time, Trace, and we'll have you back on again for another Bitcoin update.
Okay. See ya. Bye.
Okay. Bye, buddy.